Welcome to Mastering the Sweeps, a Nueva Voz trading series. Here we've applied the lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to find trades. Your job is to observe the market until it reveals one. Okay, so let's talk about mindset first. Most beginner traders lose money, not because they don't know when to trade, but because they don't know when to stay out of this. So, this week, I just want to be transparent because this is the core of today's message or lesson: when not to trade. Okay, so this week, I barely even traded. Not because I was confused or not because I didn't see anything, but honestly, it was because there was nothing there that matched my model. And that right there is where most people go wrong. And before we can talk about the entries, the strategies, or the setups, you must understand this. There are only three things in the market that they can actually do. Let me say it again. There are only three actionable things or directional movements that the market can do. And I'm going to go to my screen so I can visually show you as I explain. So, again, this is the topic for today: when not to trade. All right, so let me just go ahead and type them out. So, the first one is the market can trend. The market can reverse. Also, the market can consolidate. Those are the only three. All right, let me just scoot this over a little bit. Okay, so there are two different types of trend and two different types of reversals. So I'm going to add that line here. So this is for, I'm going to make that go a little bit smaller. For the up, uh-oh. For the uptrend, downtrend. And again, for the consolidation, it's only one move. And because this is a reversal or a reverse, it's uptrend to downtrend, or downtrend to uptrend. All right. With your consolidation, you're basically looking for a resistance line. Here is a vocabulary that institutional people use. They use buy side liquidity. So make sure you learn that vocabulary. It means the same thing. That the market is having trouble to go higher, basically, okay? So here is your support. That's retail trader language. Retail traders are you and I, but the people who have big money and can actually move the money, smart money, institutional people, they will say it is called a sell side liquidity. Again, learn that language. All right, so that's the foundation. Let me make sure that you can see everything. So let me just Make it like that. Okay. So with your uptrend, always the market is making higher highs, meaning that it is continuing going higher. It is bullish. Here's some more vocabulary. It is bullish. When it's a downtrend, the market is selling. Oh, that's some vocabulary that you may need to. So I'm going to put bullish equal buying. Okay, and this will be your bearish. If you have not seen any other videos when I explain about this, something that is super easy to remember for bullish and bearish, think about a bull and his horns, okay? They are facing upward, so it's buying, okay? Think of the horns. But for bearish, think of his claws. They are going to the ground, it's going downward, okay? All right, so now a reversal, meaning that at first it was going higher, it was trending bullish, it was buying, but then it started to sell. Okay, so at first we were buying, then you get to a point, maybe it consolidate a little bit, but then eventually it starts to sell. And if you don't know me, I'm such a visual person. So if you like visuals, well, you're in a great channel then. So I'm gonna say like at this point, it started to do something different. All right, so at this point, we were buying. Then it changed to selling. And I'm also going to put one more wording, changed to. I'm gonna put it a little bit higher. Yes, that is a great visual, so you can literally see. And it doesn't have to be perfect either, as long as you can see that at first it was buying. Look at the teacher side coming out of me. First it was buying, and now it's selling. I hope that visual is amazing for you, because for me, oh yeah, I love it. All right, so now the downtrend. Basically the same, but just the opposite direction. So here we are selling until it gets to a point, maybe it consolidated a little bit, but then we ended up buying. Again, the chart does not have to be perfect. I'm just going to copy this little line. I'll say like right here. Yeah, that's perfect. So it was selling at first, then it changed to buying. Exactly. You can clearly see it was selling and then it changed to buying. I'll make that even higher. Okay, perfect. Now the consolidation, meaning that the market is just having trouble. It's just going back and forth between the sell side and the buy side liquidity until the moment it breaks out and it starts uptrending, okay, or downtrending, and then the cycle repeats. And also it can break out this way too. If it breaks out this direction, it's basically going to start uptrend. If it breaks down going to the support level or the sell side, it will start a downtrend. Not always. That's just something quick. So if you need to screenshot that, go ahead and screenshot it. Okay, so remember, I hope this does not sound harsh, but if you don't know which one you're looking at, you shouldn't be trading. You should not. This is the basics. Okay, so study this first before you jump on the market. All right, so but for me, let's transition over to my model because I specialize in the reversals. Okay, these are what I'm looking for on my sessions. So I'm not trying to trade everything like the consolidation. No. You know me, I'm a visual person. I do not trade the consolidation. I do not trade the trend. That's next year. This is never. This is where I am now. Okay. But I'm waiting for a very specific sequence. If I don't see that sequence, I don't trade. And also, here's a little side note. If you want to see exactly the framework that I'm using step by step in more detail of how to trade the reversals, I put it together for you already. It's linked below in the description, and I'll also have a video too that accompanies the guide as well. Just a little quick side note. Okay, so my model is very simple. I'm going to go ahead and show you. I'm gonna go a little higher, and then I'm going to erase some things too. Okay, so off camera, I made the buy example and the sell example. I also made a perfect example, okay, just so you can see the overall movements. But I also gave you a real world example too. So there's 4 examples before I even show you, okay? But there's a perfect example. That's how most teachers teach their students. But when you get into the market never do clean moves like this. And whenever I was coming up with my trading, my teachers taught me this. But when I saw the market never moved like this. And so it took me a while to understand the internal moves. So if you want to think of this as the external move where they make the big moves. But the next example, this is the perfect example of my model. Okay. This is the same example, but this is what the market will most likely look like. Still the same thing. I know it looks totally different, but it's not. This is the perfect example of my model. I'm looking for number 1, a liquidity sweep from the consolidation. Remember, the market can only move in 3 things or 3 movements. This is coming off of this consolidation zone. Let me just show you real quick. The consolidation zone. Okay, and I'm looking for these 2. All right, let's go back. All right, so first, always liquidity sweep. It goes lower, okay, and then it decides to get some buying potential and buys up. But in the market, it will do pullbacks in order to get finally to this moment. But overall, we're trying to just see if the market has a strong move upward. Then I'm looking for if it changed direction. So not only does the market has to push all the way higher, it needs to pass this other consolidation zone, which is the resistance, okay, in order to make a change of direction. When I have my change of direction, I know now that the buyers have the strength. When the change of direction happens, in the real market, it will pull back, but still the same. It will just go from this point to go past the resistance line. And then I want it to come back to come pick me up, because after all this move, I don't want to try to buy here and then they take me out, because how the market moves, it likes to return. And I'm waiting for that return to ride the wave, basically. So for the sell is the exact same, but just opposite direction. Here's your perfect example. It's in consolidation. It rise higher, but now the displacement, the true move is going to happen, showing me that the sellers are now in the game. I'm not getting in here yet. All I know that this is telling me that the change of direction is happening. How do I know? Because it broke past the support. And then I'm waiting for it to come pick me back up here. Here's a perfect example so you can see it. But this is how the market will most likely will look like. Okay, so I'm going to show you all four. Screenshot that so you can study it. Actually, let me see if I can make it a little bit wider. There we go. All right, so basically, here's my model broken down in words. I'm looking for my first step, liquidity sweep, displacement, change of direction. My last step is retrace back to my order block, which is my entry. So if you want to learn step by step, because I did not break it down, nor did I show you how I got each step. I have it all ready for you, very slow in great detail. You can either do two things or both. You can watch the Start Here video where I break down the reversal models, okay, in great detail, or you can go to my pinned comment from this video and you'll see my free trading guide where you can have pictures, and I break it down for you in great detail. Okay, so if this overwhelmed you, just know this is your end goal of mastering. Okay, I didn't want to give you the perfect example because I'm gonna be real, it's not going to be like this, but you do need to know the direction. That's why I gave you the perfect example, but you also need to know the real world, because girly or my guy, you're going to be in the real world, and I'm preparing you for the real world. All right, but enough about the strategy. Okay, let's get back on topic. So remember, we are learning when not to trade. So I'm going to show you a true example from yesterday about a example of where I saw the move, but all of my steps wasn't there. So I had to use when not to trade type of mindset. So right here, this is around the time I normally trade, between the 3 a.m. Let me just zoom in. The 3 a.m. through 4 a.m. And at first glance, it looks like something is happening. The market had its little dip. And remember, I'm looking for a liquidity sweep. And you see the price is reacting. So it was coming from a downtrend. And then now you can see it's trying to rise higher. Okay. So I know something is happening. And you can see small moves. But this is where most people will enter. Okay. Around this area. But if you look closer, yes, you do see a reaction, but there is no strong displacement. The market did not clearly commit in one direction at my time frame when I trade. So it moved, but it did not confirm, and that matters, because just because price moves doesn't mean it's ready. So if I would have entered in this area, okay, because I see the market is moving down, I have a wick here. Okay, and if I look over, I'm going to just delete that because that's from the example and I don't want to confuse you. Okay, and I look over and you can clearly see that the market had a touch, an equal load. Well, actually, you will learn equal load later. I'm staying with the vocabulary that you know from your support line and your sell side liquidity. Okay, we have a touch there. We have some more touches on the, this is why it's so important to look at the left side. And as you can see, I'm not going to go even further, but you can see that it does have a lot of touches. And just saying, just because it's touching a line does not mean that it's your liquidity. You need to know more. But just know that this video is not about learning about how to find the liquidity. Today's purpose is just knowing when not to trade. So just know that this is your support, this is your sell side liquidity, and this is where we are. And first we have our touches in order to find our liquidity. So this could have been, like, if I did not see anything else, this I mean, it's not the strongest liquidity, because I would rather have it really make a drastic change. This is fake. As you can see, I'm changing the color. So I would like to see something like this. So I'm gonna keep this here for this example purpose only, okay? So it can even be shorter. So let's just say here we are in the market, okay? We have our liquidity. So this is how I like to mark it up and how to see it. Just scoot it over. So we have step one, liquidity sweep. Okay, my step two, I'm looking for a displacement, something that is strong, that is pushing in the opposite direction. But as you can see, it's not as strong as I would like it to. And it's just a few candles. So already I'm saying to myself, I don't know about that. And then look, and I'm happy I did not classify this as a displacement, because you can see, oh, here's some sellers in the market now. Okay. And this is after my window. So after this window, I'm just like, all right, well, I cannot trade because I don't have the whole setup. I only have this liquidity sweep. And look why this is so important. So you can see that the market did come back down. I'm going to move this. The market did end up reversing. It did go high like here and then went back down here. I wonder, was that the move? That was the move. Okay, hold on. So then I need to make this, actually, this example is actually perfect. I'm just going to keep it here. What it originally was. All right. So if I would have classified, you know, I know why it's wrong, because I don't have it really close. All right. So if I had my liquidity sweep, the original candle, I took away the fake wick, look what would have happened. Because usually I put my stop loss right underneath the liquidity sweep, and I'm looking for it. Oh, here we go. So it would have been realistically maybe like right here, not even a lot of pips away. Yep, because I want it to be lower than this wick, if that's my liquidity. So I would basically say it would be like about like right here-ish. Okay, realistically. And as you can see, it would have hit my stop loss. Okay. And then that would have taking me out the market. So now that money I thought I was going to get, oh, they took my money. They took my money as soon as it went here. And that's if I would have classified this little push up, okay, even all the way over here, because technically it did close above our last bullish candle. So we really technically had to change direction. And that's just if I would have tried to hurry up and get in the market. I would have lost money. But if I would have waited, okay, to see what happened, this was around 8:30. You can see it literally right here at the time, at the very bottom. So technically, my prediction did like happened, but at the wrong time. So that was our liquidity sweep. This was the strong displacement. You can literally see there's no bearish candles like this, like no interruptions. It's just a straight, beautiful, strong, bullish direction. Green candles. Okay. We did not have any interruptions. So we had our liquidity sweep. Perfect. We had number 2, which was our displacement. Now our next look is for change of direction. Did we have that change of direction from the last bullish candle? Let's see. We did. I'm gonna take these away so you won't be distracted by this. So we did have our change of direction. From this candle to this candle. It closed above. Now we had all 3. So now I can look for my entry. Where will the entry be? In this area down here. Because this is my last bearish candle. I'm going to change that color to green so you know I will be entering and I'm also putting like a little background so you can see it a little bit better. So this is what I'm calling my order block. Another vocabulary word that you do need to learn because institutional people use that. But simple terms, this is your entry zone. And did it enter? It did. So as you can see, this strategy does work. But it just didn't work when? In my time frame. I needed this, all of these strategy, all of this sequence, okay, to be before my time zone to enter. This is what I wanted to do at the 3 to 4. Okay, so the strategy works, but sometimes the market doesn't give it to you in the time that you're on the market. So this is an amazing example of when not to trade. If I would have got in because I believe that the market will go higher. Let's see if it actually did. Look at there. Beautiful. Oh my goodness. Look, I am not making this up. Uh-oh. Let me do that again. Like right now, literally it's 8:30 in the morning, and this is where the market is right now. Beautiful. 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 And another example, do you see why I gave you the real example? Because screenshot this. Please screenshot this. This is the real example of when not to trade. I mean, my strategy, and it got in. Heck, I'm gonna copy it. All right, so just real quick. So here's your consolidation. Let me just do it real quick. Here's your consolidation. Remember, it did not go all the way down. It's not perfect. Okay? But it did rise higher. There was no interruption, but it was an interruption here. But it ended up going down, came down, you know. But as you can see, it is not perfect. I'm gonna make the line a little bit thicker so you can see that real quick. I'm gonna go back to the model. When not to trade. Do you see it now? Do you see the reason why I keep it real with you? I give you the perfect example to show you the true direction. But sis, or my guy, okay, you're not going to see the perfect example. You're going to see this. So train your eye. All right, so with that being said, we're around that 30-minute mark. So let's start closing this, okay? So here's your gem that I want you to think about. Being right doesn't matter. It doesn't. If your timing is wrong, because I was right, but the timing was wrong. If I would have got in a little bit earlier, it would have took me out, but went right back into the direction that I predicted that it would be. And this is why I did not trade. Not because I missed it, but because it wasn't ready when I was in the market. And I'm not here to force trades, and that's what I'm trying to teach you. And if I wouldn't teach the setup, I wouldn't trade it. You know what I mean? So let's redefine success. Not trading is not a failure. It's a decision. It's discipline. It's what protects your capital and your mindset. And before you learn strategies like liquidity, sweeps, and entries, you must master this first. You must have the mindset of when not to trade. Because none of it matters if you know all of your strategies, if you're trading the wrong time. And remember, if you're serious about learning, start tracking the days that you should not be trading. That alone will help you change everything. And if you need structure while you're learning, I have a full guide that's available below in the description or the comments that you can keep following along to. And don't forget, I do have a video that goes more in depth with my strategy, because today was only just the surface level, just so you can understand the mindset. The goal of this video is mindset. You must have the mindset. But thank you so much for tuning in. Make sure that you comment one thing that you learned today, and I will see you in the next lesson.